Alright, so what's up guys? I'm Cam, or Trading Patiently, whatever you guys want to call me. In this video, we are going to be diving into my full trading plan. For those that saw the last video, I dove into market maker models in depth. I talked about the logic, the details behind it, and then how to simplify it. So this video is kind of going to be expanding on that because MMXM is, the core of everything that I do. It's the framework for how I trade. So I'm going to be expanding on that in this video, but I'm going to be going more in detail about how I actually utilize this, my weekly routine, how I approach this on the charts every single week. There's a quote by ICT that I absolutely love, and basically what he says is, if there's no consistency in how you approach the markets, how can you expect consistency to materialize in your results? So with that being said, let's get right into this video. I'm going to be breaking down my full trading plan and how I consistently approach the markets, and hopefully you guys can apply this and, approach the markets in a way that's consistent as well, and then see consistency in your results. So you can apply this plan for day trading, intraday trading, or swing trading, whatever fits your personality more. You literally are trading the exact same way. You're just changing the time frames that you're executing on and the time frames that you're using higher time frame PD arrays on. So price is fractal. You can use a 15-minute PD array, a 1 hour, 4 hour, daily, weekly, monthly, whatever. You can enter off whatever time frame you want. So with that being said, let's go over the day trading plan. As you can see here, this is the exact day trading plan using MMXM. And basically the very first thing we need is red folder news on the day. What this does is guarantees volatility injection on the day. And when you're day trading, time and volatility injection becomes a lot more important because you need volatility on your side to push price that day. When you're day trading, you're trying to be in and out of positions that very same day. So you need volatility on your side. To guarantee volatilities on your side, that is why we demand news on the day. When I was day trading, I was demanding red folder news on the day every single time. What that does is over time, that's tilting probabilities in your favor and pretty much guaranteeing that there's volatility of some sort on the day that you're trading. Demanding that there's red folder news on the day that you're trading is a huge filter and way of tilting probabilities in your favor. The next thing is trading within a kill zone. So either Asia kill zone, New York kill zone, or London kill zone because of volatility. The next thing is external and internal liquidity from the monthly, weekly, or daily. This is guaranteeing that you have a very clear and obvious drawn liquidity and bias from the higher time frame. When you understand where the higher time frame is drawing, we can align with that on the lower time frames and take trades in that direction. Next, you're looking for a higher time frame PD array in the direction of your drawn liquidity from the monthly, weekly, or daily. And then off of that higher time frame PD array, once we get there, that is when you zoom in and look for your entry model. All of this is using MMXM, market maker models. Now really quickly, let me go over the swing trading plan. It's extremely similar. The way that you're viewing price is exactly the same. You're just going up in time frame. And when you're swing trading, volatility in time becomes a bit more insignificant because you're not at the mercy of the lower time frame and volatility. You don't really need volatility at the time that you enter with swing trading. So here we have the exact trading plan for swing trading. News on the week, red folder news on the week for whatever currency or pair that you're trading. I like to make sure that monthly order flow state is aligned with the direction that I'm trading. So I'm looking for ERL and IRL on the monthly, weekly, or daily in the direction of the monthly order flow state. So if the monthly order flow is bullish, discount arrays are holding, bullish order blocks, bullish fair value gaps are holding. I want to be looking for ERL and IRL on that pair in the direction of the monthly order flow. From there, I'm using the monthly, weekly, or daily IRL and ERL as my higher time frame PD array, and I'm entering off the 4 hour and 1 hour in that direction of my draw on liquidity. I showed this in the previous market maker model video, but this is the time frame alignment you want to be using. So when we're trading off a monthly PD array, you want to look for a daily model, weekly, 4 hour model, and so on and so forth. But this is just a great way of understanding, what you should be looking for when we're trading off a specific PD array. Now, let me show you a beautiful trade example on AUDJPY that I actually did take this week. And I'm going to explain to you the two different approaches with these trading plans, but how they're pretty much the exact same, like I said, just very slight differences. So here we have AUDJPY, Australian dollar, Japanese yen. And I actually did take and execute on this trade this week. I am swing trading, like I said, so I took a swing on this pair this week. I'm going to fully break it down and also show you the two different approaches. So if you want to be a intraday trader or a swing trader, you can do either one with this trading plan. Very first thing I'm doing is looking at the monthly time frame. As you can see on the monthly, discount order blocks and discount fair value gaps are being respected by price. Very clear bullish order flow. So when I'm swing trading, I want to make sure that I am in alignment with this monthly institutional order flow. So I'm going to be looking for internal or external drawn liquidity in the direction of this monthly order flow. And this is pretty much what the weekly looks like. Again, very clear weekly order flow. And what we can see here is a very clear weekly fair value gap. This acts as our internal, and this range, like I said, showing you earlier, marking the most recent swing high to swing low, that's our most recent price range. So this is our internal, and we're looking for a move to external. So we have a very, very clear drawn liquidity on AUDJPY from internal to external. Not only is that, internal to external move very clear and obvious to me, but it's in the direction of the monthly order flow, like I stated previously, bullish, in the direction of the monthly order flow, an uptrend. So at this point, this is checking every box. Bullish fair value gap is internal, and I'm looking for a move to external. Monthly and weekly order flow is in alignment. So from here, because we have that weekly PD array that I want to be trading off, I want to be trading the monthly market maker model. And because I'm swing trading, I'm willing to take my entries on the 1 hour and 4 hour. So going back to my swing trading plan, we had news on the week. I forgot to mention there was red folder news on the week. We have the monthly bullish order flow I just showed you. Then we have a very clear move from internal to external on the weekly in alignment with that monthly order flow. So every box has been checked on AUDJPY, and the higher time frame PD array I'm using because we're swing trading is that weekly fair value gap. So at this point, all 4 of these boxes have been checked, and I'm looking at the 4 hour or 1 hour for an entry. Because this is a weekly PD array, I'm looking for a 4 hour market maker buy model to form in the direction of that drawn liquidity. So at this point, I'm looking to take an entry off the 4 hour. Going back to the 4 hour, this is our reaction from that weekly fair value gap, and I'm just waiting for a change in the state of delivery of the 4 hour order flow. So at this point, we have bearish order flow on the 4 hour, and I'm waiting for it to shift bullish. I'm waiting for that change in the state of delivery. I'm waiting for price to change bullish. Once we get that, I can begin to look for longs and trade off the 4 hour in the direction of that drawn liquidity. So when you're looking for a change in the state of delivery, you can do this 2 ways. You can wait for that market structure shift to confirm that we're changing state of delivery, or you can wait for a fair value gap in and a fair value gap out of that higher time frame PD array. This is Ario's ST model, is what he calls it, and ST is simply a fair value gap in and a fair value gap out. So you don't even need to worry about the market structure or market structure shift. You can simply read the fair value gaps to see if we're changing the state of delivery. So you're looking for a fair value gap into the higher time frame PD array and then a fair value gap out. You don't need to worry about the market structure shift. I just like it a lot more. It's much more simple. Full 100% credit to Ario. When I look for a change in the state of delivery, I use Ario's ST model. So if you guys want to check out Ario's ST model, I'll leave a link to that down below in the description. Shout out to my guy Ario. Definitely recommend using his ST model to view the change in state of delivery. That way, you're not caught waiting for a market structure shift up here when we get a change in state of delivery down here. When we get that fair value gap in, fair value gap out, order flow is shifting bullish. So for me, I like to put a little light bulb when I'm explaining change in state of delivery. It's just a light bulb that goes off that order flow may be shifting its state. So when we get this fair value gap out, this now becomes our change in state of delivery on the 4 hour, and this will be our low risk stage of the 4 hour market maker model higher. At this point, I would be looking for entries, trying to take a swing off the 4 hour. So me personally, I just target 2R within that context that I've built off of the weekly. So going back to that weekly internal to external, this is the boundary that we want to operate in. So from this fair value gap to that external high, so from internal to external, that's the boundary that we want to operate within. I'm just looking to target a static 2R within that boundary that I create. That is where I got filled. and I was looking for longs to swing AUD/JPY. And as you can see, swing played out absolutely beautifully. Again, it checked every single box. We had the bullish monthly order flow. We had red folder news on the week, a very clear draw on liquidity from the weekly for value gap to the weekly external range high. Then we had that weekly as our higher time frame PD ray, and then our 4-hour market maker buy model low risk stage entry. Now, let me explain to you how if you're a day trader, you're pretty much trading the exact same way, just using lower time frames and being a bit more keen on making sure that volatility is on your side. So going back to the day trading checklist, you need red folder news on the day. You need some sort of kill zone, either Asia, New York, or London. Then you need a very clear draw on liquidity on the monthly, weekly, or daily, and then a higher time frame PD ray from the 4-hour and 1-hour, and then your entry model on the 15-minute or 5-minute. So we can apply this logic to the exact same trade idea, and you're essentially trading the exact same way, just entering off a lower time frame. So again, just to highlight this is our clear move from internal to external on the weekly. This is our draw on liquidity. We have monthly and weekly bullish order flow and a clear draw on liquidity. So if we're going to be intraday trading, this is our draw on liquidity from the monthly, weekly, or daily. We want to make sure that we have red folder news on the day that we're looking to execute. So now again, going from the weekly, internal to external range liquidity, we're looking for a 4-hour buy model from that weekly PD ray. Essentially what we would be doing when we're intraday trading is trading a market maker model within a market maker model. And this is the fractal nature of price. So what you would want is you would want to make sure that if you're going to be intraday trading off of this 4-hour PD ray, you want to make sure that there's red folder news on the day. Again, just assume for this hypothetical that we had red folder news on the day. So that box is checked for our day trading plan. Then we have a kill zone that we need to be in. So New York, Asia, or London kill zone. This is our higher time frame PD right now. We have the weekly draw on liquidity from internal to external. And then from there, I'm just using the 15-minute or 5-minute as my entry time frame. Because we're using a 4-hour PD ray, we want to look for a 15-minute market maker model entry. So we have our 4-hour higher time frame PD right here, and then we're going to be looking for a 15-minute entry from that 4-hour PD ray. So as you can see here, this is our 4-hour fair value gap, and we're about to be within London kill zone. And essentially what you're doing is you want to be trading that 4-hour PD ray, and you're just waiting for a change in state of delivery on the 15-minute. You're waiting for this 15-minute market maker buy model to engage. Again, you can either use Ario's ST model where we get a fair value gap in and a fair value gap out, or you can wait for the market structure shift like right here. And then that is when you can begin to say, all right, order flow is now shifting state of delivery, and I want to look for longs intraday entering off the 15-minute. You can enter off one of these fair value gaps and then risk the low. If this is a true change in the state of delivery here and we're heading higher off that 4-hour PD ray, that low should remain intact, and then you just want to target 2R within that range. So again, if we're going to enter off this fair value gap, we have our change in the state of delivery. We're essentially trading the low risk stage of this 15-minute market maker buy model within that 4-hour market maker buy model. So I know that sounds confusing, but that is the fractal nature of price. And if this is going to head higher off the 4-hour fair value gap, this low should be protected and remain intact. So you put your stop below that and you target 2R intraday within that range that you've created off the higher time frame. So let's see how this plays out. Comes very, very close to stopping you out here. But as you can see, that low is a true low and we headed higher off of it. So it is a protected low. And it's taking quite some time to deliver, again, because this example didn't have news on the day to deliver price. That being said, we did deliver. And again, this is just a hypothetical. I just wanted to show you the fractal nature of price and how these things work. But ideally, when you're executing, on a day like this, you want to have red folder news because then you're likely to get those big candles in the direction that you're trading. So when you have the direction right, and you do all that higher time frame analysis, you're going to get candles like this on the days with red folder news, in the direction that you're trading. So instead of having all this chop to hold through, because there was no news on the day, like I said, you would get huge candles. So I'm pretty much guaranteeing that over here, this is CPI. Yep, 9:30 CPI. That is when the red folder news released. And as you can see, we get those huge candles in the direction of that higher time frame draw on liquidity. So yeah, hopefully that makes sense and didn't confuse you guys. I know I gave you a little hypothetical on the intraday trading example, but pretty much all you're doing is making sure that your trades check those boxes. So if you're swing trading, you want news on the week, you want a very clear and obvious draw on liquidity in alignment with the monthly state of order flow, and then you want to enter off the 4-hour and 1-hour in that direction. If you're day trading, you're pretty much trading the exact same way. You're just trading and entering off the lower time frame, and you're making sure that there's red folder news on the day for volatility injection in price. I personally credit ICT and Ario as my mentors. ICT to me gave me the ingredients, and Ario simplified it in a very beautiful way, and just gave me an awesome way of viewing price. So I want to give credit to them as my mentors and for helping me put together this trading plan. All of this was put together from my study of ICT and Ario. So again, I'll link them down below in the description. Like, comment, share it with your friends, subscribe, all of that. That's all I ask, and I hope that's not too big of a burden. It literally takes 3 seconds, so I would really, really appreciate it if you guys could do that. With that being said, that's really it for this video. I hope it was insightful. If I left something out, if there's something that confused you or something you want me to expand on, if there's videos that you guys want to see, or specific topics that you guys want me to touch on, definitely let me know down below. But with that being said, that's really it for this video. I hope you guys did enjoy. I'm out.